Welcome back to T2SMC Trader. How are you all? I wish everyone is good. In this video, I'd love to break down the PM session, the screenshot I have shared to our Discord community. Those people who are confused, I hope after watching this video, the things is gonna be much more clear. So please pay attention until the end of this video. I'll just try to make sure that the video is not that much longer. I'll try to make it shorter, but still, if it is gonna be a bit longer, sorry for that, okay? And please don't forget to push the like button. Let me know who was watching this video by writing down boom on the comment box. And if you are new, please welcome to our community, subscribe to our channel, push the notification button so that you will get the notification, because I always break down the market in live through the live streaming. Let's go to the video. This is the weekly chart, and in my lower time frame you will see this gap over here. With this gap, you will look to my lower time frame, you will be able to see this gap. This candle open and this candle close, that was a new week opening gap. So just remember, this is the new week opening gap. When this market failed to close above this new week opening gap over here, that candle, I was confident that this market is going to fall at least until the low of this new week opening gap. Not this gap, so it's not important, until the low of this new week opening gap, and then I will keep looking for the sell until this sells a liquidity. If this market could close above this new week opening gap, then maybe I would start to look for another all-time high by using the standard deviation. However, this candle perfectly rejected from this new week opening gap. That this week, this running week open, went higher and then fall, came here so far. Tomorrow is Friday. We'll see how this candle is going to close. This weekly candle is going to close tomorrow. We'll look for that by the end of tomorrow's trading. This is the daily chart, and on the daily chart, this is the deep premium fair value gap. Market never reached over there. Everything was outlined prematurely. Market never reached over here. Instead of that, market fall. That was the inverse fair value gap. This market perfectly came to the lower quadrant over here and then come back again to this new week opening gap, rejected from there, sent the market higher again. I really wanted to see today it will trade the 50% of this inverse gap, and then it will start to keep falling until to the low of this new week opening gap. Unfortunately, it didn't happen. I will show you exactly from where this market reversed when I will be in my lower time frame. But that was my so far expectation. If it could happen, maybe I would be able to catch a big run. But still, if I miss the big run, I don't need to worry about that, because I know how to go for the trade, which is going to be clear to you when I'll be in 1 minute chart. But here it is important that I was expecting this market will come here. If it would go there, I would catch the whole fall from here to until here. I would catch the whole fall. Unfortunately, it didn't give me the precision over here. I was not able to catch the whole fall, but instead of that, I will show you how to catch the run over here. That means if you miss the run from here, how can you catch the run from there? That's important, of course. And as you know that I'm just sharing the premium and discount things for now to make it clear for understanding. I hope this video is also going to help to understand that premium and discount later when I will explain it. This is the 4-hour chart, and this is another new week opening gap. The new week opening gap I have used here, if you remember from the weekly chart, that new week opening gap, and I told that if the body can close above this new week opening gap, I'll look for that all-time high again. Market failed to close above this new week opening gap from the weekly chart, so I was keep looking for the selling opportunity. See this small new week opening gap over here. You are going to see this new week opening gap right now when I'll be in 4-hour chart. When I'm coming to this 4-hour chart, this is that new week opening up over here. Market extended to the right. Today's market came until the 50%. So the middle line is the 50% of the new week opening gap. I'm just changing the color. Perfectly trade the concurrent crossment. The week reach until the upper quadrant level and then fall. You can see the dramatic fall over here, came to this new week opening gap perfectly to the lower quadrant. Here this candle open, trade the 50% of this new week opening gap, and then fall here, closed over there from the 4-hour chart. At the same time, if you look at that week and mark the quadrant level of that week, very specific week that has cleared all other weeks and traded this new week opening gap, it has also traded the 50% of that week. So if you are interested about the week quadrant level, you can add this information over here. I don't need it just because I have the new week opening gap, but there is another quadrant level of the week that is going to be important for me. I'll explain that to you when I'll be in 15-minute chart. But for now, you can see that this market came until this 50% of that new week opening gap, rejected from there so beautifully, precisely, and so accurately, and then this fall happened. I really wanted to see it will go a bit higher, and there was that daily inverse parabolic gap constant encroachment. This was the lower quadrant of that daily inverse gap, lower quadrant, and here there was the consequent encroachment, but market didn't go over here, so I was not interested to catch any of this run from here. I'm coming to 15-minute chart. In the 15-minute chart, this is another week that has cleared all other week, traded this new week opening gap as well as this 15-minute bullish fair value gap. So this quadrant level of that week was important to me. I was live. I showed you the buy from here yesterday. That was from yesterday actually. I showed you how to take the buy from there, and that run we caught yesterday by using this quadrant level. However, when this quadrant level has been reversed today, this candle close, that candle close below this quadrant levels. Okay, so this bold line is that 15-minute quadrant level. So when I'll be in 1-minute chart, you'll be able to see this bold line, and this 3 line is the new week quadrant level. Okay, the upper quadrant 50%, lower quadrant, and the whole new week opening gap, and this bold line is that specific week quadrant level which I'm going to use as a resistance right now. However, this market came here, rejected from the 15-minute chart. It has been rejected of that new week opening gap upper quadrant. So from 4-hour chart and the hourly chart, it has perfectly rejected the body, perfectly respected the 50% of this new week opening gap. And from 15-minute chart, it has been rejected from the upper quadrant. You can see the body, how beautifully it has been rejected from there. Today we have catch the buy run. Okay, there was so beautiful setup over there. We caught that buy run, and then I told that if this market failed to come over here and then started to fall after closing the 50-minute candle close below this line, when it will close below this line, I will start to look for sell again until the low of this new week opening gap. It was a very bold statement, no confusion, nothing. There was an unfortunate because this market didn't give any kind of retracement, so I was not able to catch any of that candle because of no retracement. I let all of them go, and then 11:30, you can see here, this is the 11:30 candle. From that candle 11:30 candle to until 12:50 candle, okay, there is the 12:50 candle until 12:50 candle. It's called the lunch hour. So in this lunch hour, I'm not interested to trade. After the lunch hour, I'll start to trade again. Now I'm coming back to 1-minute chart, where actually most of my explanation is going to happen from the from this 1-minute chart. But before that, let me actually open this thing to my 1-minute chart so that you guys can see everything over here. Okay, so here, now this is the 1-minute chart. Remember the whole morning session, we have framed all of these buys over here with the including the NFP trade. This was really so beautiful session, like lot of winning trade, and the setup was good. And then finally this market started to break all of this fall. I had nothing to do, just because there was no retracement. Finally the 11:30 candle started the lunch hour from the 11:30 to until 12:50. I'm not able to trade before 12:50. 12:50 is my PM session. For me, the PM session start from 12:50. So around 12:50, you can see that this market failed to reach until the low of this new week opening gap. So this 3 bold line is the week quadrant level, here, that is that weak quadrant level. You remember we framed that beautiful buy, then here from here I took the buy. However, this is that quadrant level. Now I am going to use this quadrant level to look for my selling opportunity. First, you have to understand the premium and discount logic. Remember, until 1250, I don't have any opportunity to trade. From 1250, I will start to look for a selling opportunity. From here to here, this is the leg. From 1 minute chart, market came to the deep discounted area because there is no other low below that low. Simply, there is no other low below that low. This is the deep discounted area, and the leg started from there. So my intention to see from here to here. Actually, let me use the replay mode, then it's gonna be easier for you guys and you will get the point clearly. This is that 1250, sorry, the 1250 candle, wherever is the 1250. So let me actually go until the 1250. So this is the 1250, I guess, if I'm not wrong. Yeah, so until here, this is the leg. From 1250, I'm interested to look for a selling opportunity. First of all, if you take a closer look over here, still now there is nothing, and I'm looking for sell, so I need to see some buy side liquidity has been cleared first. Some kind of buy side liquidity has to be cleared first, then it should give me the selling opportunity. I will go that top, that bottom, this is the equilibrium. I want to see it will come to this deep premium area. This is the deep premium area. So I would love to see it will come to this deep premium area and then it will start to fall. Over here, the deep premium area is aligned with this quadrant level 50%. So if this market really would love to fall, it should go to the deep premium area first, to that specific leg. From here to here, first retracement should reach the market until deep premium from the deep discount. Let's see what happened. I'm not interested to take any kind of buy. So if this market starts to go higher, I'm not interested to take the buy. Here I'm just watching. Can this market go to the deep premium area? At the same time, can it take the buy side liquidity? So over here you can see this is a high, that is a high, relatively equal highs. If it cleared that, I will say okay, market has cleared the buy side liquidity. So would love to see first if it can take the buy side liquidity. It doesn't need to take that buy side liquidity. It can simply take this buy side liquidity and then start to fall. How long? Until the low of this new week opening gap. I don't care it will go through this or not. I don't care about that. All I care, can it touch the low of this new week opening gap? But before falling, can it take the liquidity? If it cleared that liquidity and then gave me the selling opportunity, I will take that sell. There is nothing wrong. But if it go to this deep premium area and then gave me the selling opportunity, that is the best case of scenario. From deep discount to deep premium. Very simple. So let's see what happened. This market has started to fall, right? Is there any is there any liquidity taken to that leg? Did this high take any liquidity? No, it didn't take any liquidity. So when it didn't take any liquidity, I'm not interested to look for any kind of sell. Whenever you would love to look for a sell, there should be some kind of buy side liquidity should be taken. So it didn't take any sell side liquidity, sorry, buy side liquidity. I'm not interested to look for sell. Finally, this high has cleared that high. That means the liquidity taken is done. Any kind of selling opportunity now, I'm good to go for the sell. As well as this quadrant level of that new week opening gap 50% is holding the market. So if you come here in 15-minute chart, you will be able to see that it is respecting the 50% of that new week opening gap. Okay, it closed below this new week opening gap over here. It closed below this new week opening gap. It's a sign, brother, I will be back again. Then this candle closed above this new week opening gap. That this candle open from 15-minute chart, tap exactly to the 50% of this new week opening gap, started to go higher. When it closed below this new week opening gap, it's the sign, I will be back. Don't worry, I'm coming back. Just don't worry, I'll be back. Now I'm coming here one more time again. So when it has cleared that buy side liquidity respecting the concurrent crossment so beautifully, any kind of selling opportunity now, I'll look for that sell. What happened? This market keep going higher. Look, until now there is no selling opportunity. Finally it has cleared that buy side liquidity as well. I'm very happy to see this. Still there is no selling opportunity. I just need a selling opportunity, some kind of bearish fair value gap, market structure shift, something over there that will tell me to go for the sell. However, when it started to go higher, you can see that this low and that low, they are the clean lows. I call them the sell side liquidity or the clean lows. Market should never ever leave the clean lows. I called them the liquidity should be taken. Market can't leave this liquidity. I am pretty much confident this market will fall back again. Even if it failed to trade this low, it is going to clear that sell side liquidity. That's for sure. This sell side liquidity should be cleared because they are clean lows, tick by tick. This low and that, I'm sorry, that low and that low, they're the exact low. Now look over here, you can see L 24484.0. see whatever it you will be able to see, just look over there. What do you see over there? 24308.50, 308.50. Now I'm coming to this candle low. What do you see over there? 308.50. They are tick by tick the same lows. This market will fall again and clear this sell side liquidity. At the same time, it should come until the low of this new week opening gap at least. So if I'm looking for a sell, now I have the sell side liquidity as well, this sell side liquidity. So far I'm seeing the 50% of this new week opening gap holding the market, sending it higher to clear some buy side liquidity. Buy side liquidity has been cleared perfectly. Any kind of fall, I'm good to go to take the sell. You can see market is going higher. I don't need to worry about any kind of sell or pushing button right now. I don't need to worry about this leg as well, any kind of fair value gap or something. Nothing. All I need some kind of setup over here. This is that quadrant level from 15-minute chart. Okay, market has traded the 50% of that quadrant level. Happy to see any kind of fall from there. Let's see if it can fall from there or not. Finally, it has closed above the upper quadrant level of that 15-minute wick as an inversed way. Then first time I got the reaction from there. Am I going to take the sell just after seeing this candle? Of course not. I need more confirmation. That will tell me I am going to fall. What do I need? Market has cleared the liquidity. Do I need, is that important? Of course. If I would love to look for a sell, some kind of buy side liquidity should be taken. Perfectly it has been traded that it came here to the quadrant level of that 15-minute wick. Just wait for selling opportunity. Let's see how this market worked, and then it fall here, this candle, still no sell, and then finally it has created this kind of scenario, and I have this fair value gap over here. See this small fair value gap from 15-minute chart? It's a beautiful fair value gap from 15-minute chart. According to the premium and discount, remember, according to the premium and discount, this market from this high to that high, it should come to this deep premium area. Now if it would love to keep going higher, it can't go below the 50% of that new leg. See this new leg, it should not go below the 50% of that leg, and it should keep going higher. Now I am not bullish, I'm not expecting this market will keep going higher, so I would love to see it will fall and it will come to this deep discounted area. I'm expecting like that way. If I was bullish, I would expect it will work with the premium area and it will keep going higher. However, there is a gap. It doesn't mean that I'll take the sell from this gap. So if the market can trade this gap, I'll take the sell. No. Why? First of all, I don't have any market structure shift. Secondly, there is no setup yet. So this market can be just a retracement to the premium area, to that specific leg, and then it can start to go higher. Any kind of sell from there is highly risky. What happened next? Then this market open, fall a bit more. Still there is no opportunity for me, and then it started to go higher, trade this gap. Look at this gap, so beautifully, perfectly, can't be so awesomely, okay, over here respected from that gap, as well as respected from the quadrant level, lower quadrant level over here. Still, I'm not sure it is going to fall or not. This upper quadrant of the new week opening gap can hold the market, send it higher again. So I am still not confused. I mean, not confident to take any kind of selling opportunity. Then this market went a bit higher, and you can see all of this drama over here. Market is doing some kind of consolidation around this area, just doing this consolidation, and then fall dramatically over here. Now, when this fall happened around this area, it's my opportunity to go for the sell. Here is my opportunity to go for the sell. If there is a market structure shift, any kind of market structure shift, I would love to go for that sell. If you look this low, that swing low over here, or that swing low, whatever you would love to mark, I would love to mark this one and that one. It's a market structure shift. I have this market structure shift now over here, fair value gap around this area, around here. If the candle trade this gap, I would love to take that sell from this gap and would love to put my stop loss at least above that high. At least above that high. It is better to put above the highest liquidity level, but as it is highly volatile, I'm not interested to put it over there. So at least I'll cover this high. Still, that is 61 handle. Can't go for this. I can't go for this because it is 61 handle. It is against my rules. So what I will do, I will put my stop loss just above this gap, which is kind of 26 handle. At least this gap is going to be covered by my stop loss, and of course my entry is gonna be exactly to the low of this fair value gap. So you can see this candle didn't provide me the entry. This candle didn't reach to this entry zone or entry gap. This gap market didn't tap, so I'm not in this trade yet. Okay, at the same time I would love to mark that specific leg to see where it is trading right now. Remember, if this market would love to fall, it has to fall to the discounted area. So this is the leg, and this is that equilibrium here. That is the 50% of that specific leg. This is the equilibrium or the 50%. It should come to this deep discounted area if it would love to keep falling. I would love to take the sell over here. Again, the stop loss has to be above this high. I'm not able to do that just because it's highly volatile. So I'll go maximum 25, 27 handle, something like that. If I get stopped out, I'll try to take re-entry over there. My target is going to be this sell side liquidity over here, around this sell side liquidity. In the meantime, I would love to take some kind of partial to this last fair value gap over here, because this market can simply trade this last fair value gap and then it will start to go higher again. I would love to try some kind of partial over here. I still didn't get the entry over here. Market closed below this equilibrium of that specific leg. It's a good sign that market has closed below this equilibrium. That means it came to the discounted area. I'm happy to see that. So I'm going to remove this quadrant level, the premium discount level, and would love to see if it can give me the entry opportunity. So the next candle open gave me the entry. It tapped to the gap here. Just let me show you that. You can see this candle simply tapped this gap. So I will get my entry over here, and I would love to hold my trade until this sell side liquidity by seeing or by taking some partial to this last fair value gap. Remember, above the sell side liquidity, whatever is gonna be your last fair value gap, that is the strongest last fair value gap. It can simply stop the market, send it higher again for the all-time high again. Okay, or whatever high is, it can send the market higher again to take that on. My first intention to see if this market can keep falling to this deep discounted fair value gap. If it come to this deep discounted fair value gap, I will show you the premium and discount logic again. Then this market fall, okay, and finally came to this area. When it came to this deep discounted area, start from that area again. That specific leg, it is coming from the deep discounted area. It is going. So where should it go? To the deep premium, because it is coming from the deep discount. Now, when this high happened here, it's the deep premium area to that specific leg. But in this leg, if I look for that specific leg, new leg, right, this leg is inside that leg, this high is below that high. So if I would love to look for this leg, it is not the deep premium, it's a premium area but not the deep premium. I would love to repeat this one more time, because while you will look or you will listen to me, you can get a bit confused over here. When I'm watching this leg from here to here, this leg is an independent leg. It is not inside any other price action. This is the lowest low. There is no other low below this low. This leg is an independent leg. So I'm watching from here to here. This is the deep discounted area. Why deep discounted? Because there is no other low below this low. That is why it is a deep discounted area. To that specific leg, this is the deep premium area, right? If you just mark from high to the low, there will be the equilibrium, and this is the deep premium area to that specific leg. When I'm going to avoid that leg, now this is another independent leg. In that leg over here, this is the deep discounted area, but this high is not the deep premium high, because there is another high above that high. When I'm looking for this selling opportunity, I would love to see this high is coming very deep area to keep falling. When it came to this very deep discounted area in that specific leg, as it is not coming from the deep premium area above that high, deep premium area, now I'm watching this leg. That means there is no other leg. This is the only leg. It is not coming from the deep premium. It should not go to the premium area again, to the deep premium area. As it is not in the deep premium, same, it is not in the deep discount. Above this high, above that high, there is another high. Below this low, there is another low. As an independent leg, it is not the deep discounted area. As an independent leg, it is not a deep premium area. This retracement should not be. This retracement should not be to this deep premium area. One more time, it should work with the discounted area and then keep falling. Very confusing. I'm going to make it absolutely clear to you right now. Listen to me carefully one more time. Here to here, okay? So I'm just trying to put it here, okay? From here to here, there is just one leg. Don't forget about everything. There is no other low below that low. Below that low, there is no other low. How you are going to start the premium and discount? This is how you are going to start. First, decide where you want to go. I have already decided that I would love to go to the low of this new week opening gap low. I would love to come over here. I have already decided that from my higher time frame analysis or everything. To that specific leg, this is the deep discounted area. Why? Because there is no other leg or no other low below that low. When I'm watching this displacement, I would love to see that this will come in this leg premium area. See this leg? This retracement is going to happen to the very premium area of that leg, not above this high. If this leg go above that high, this means this leg doesn't have any more value. If it can take that high, this leg doesn't have any value. In that type of situation, this leg is gonna be a new leg that I have to use as a premium and discount. Until it is not going to take that high, I am going to accept to come here in this deep premium area. It can come to this deep premium area. There is nothing wrong with that. Now when it came to this deep premium area, this leg is done. I don't have any importance of this leg anymore. I'm looking for sell. When it came to this deep premium, there is now two type of situation. First, it can a new leg, okay? So over here from this low and that low. Now all my job is that specific leg. So remember this line or this gap. This is the deep discounted area to that new leg. I'm going to mark this leg. Remember, the previous leg is done already. So I'm going to start from here to here. This is the new leg. Now, when this market is coming from there and fall, if it fall until the premium area to that specific leg and started to go higher, that means I'm wrong about my bias. Market is not going to fall anymore. It will keep going higher. Do you understand? In this leg, if I'm bearish, I would love to see it will come to this deep discounted area, because if it come to this deep discounted area, it will keep falling. If it doesn't come here, instead of that it work with the premium or the equilibrium to that specific leg, I am wrong, it will keep going higher. What is the importance? Because if it come here and it doesn't come here, it will keep going higher. Everyone knows that. The importance is when you will see this market is coming from here, it is not the deep premium, because there is another high above that high, and it came here, it has lower possibility to go higher. Instead of that, it has higher possibility to keep falling. So those people who think that buy in the deep discount, sell in the deep premium, this is the problem for them. When it came here, think that I didn't take this sell. I didn't just take this sell. I'm going to remove this thing. I didn't take that sell. I'm going to mark this leg. Now I'm confident it is going to take that sell side liquidity. See this sell side liquidity? It is going to be taken when it came to this deep discounted area. Now I will take the sell in the discounted area. I don't need to see this market will come to this premium again to fall to take this sell side liquidity. It came to this deep discounted area, any kind of discounted area now of that that new leg, I'll take the sell. I'll show you that now. So here a new leg from here to here, this market can maximum go until this equilibrium. So my stop loss has to cover this equilibrium. In here, whatever discounted things I have, I would love to take that sell from that area. So please don't get confused by the, let me actually remove this new wick opening. Now I will keep it actually, because later I will need that. So here to the low and to the high, if you mark that leg, this is the equilibrium, discounted area. Below this equilibrium, this is the discounted area. Above this equilibrium, this is the premium area. Think that I didn't take the sell over here. I would love to go for the sell. How I am going to decide that now it is going to fall for this sell side liquidity? After seeing this candle come to this deep discounted area, by marking that first leg, second leg. Now I am confident that it is keep falling for the sell side liquidity. In this deep discounted area, I have one fair value gap over here, around there. I have one fair value gap here. I will take the sell from this fair value gap. I'm just trying to show you. We'll cover that equilibrium. If you see it's a huge stop loss, forget about that. And I will target this sell side liquidity or that low, because I'm confident this is going to be taken. Now, if you see here around this area, there is another gap. You can try to take the sell from that gap, because it will help you to get a smaller stop loss, and then you will wait to see if you can get the entry over here or not. Okay, unfortunately it didn't give you the entry from there. Instead of that, from where it has worked, just look at this, came to this gap and then fall to take this sell side liquidity, worked with the discounted area. Even it rejected to go until to this premium area. Instead of that, it worked with the discounted area and then keep falling, take that sell side liquidity. This is how you are going to use the premium and discount. So sometimes when you see I took the sell in the very discounted area and I'm so confident, this is how I determined, is this market working with the discounted area or it is working with the premium area. However, this is that area where the market trade this gap, and this is how you will break this trade from here to until the sell side liquidity. Now if it is understandable for you guys, okay, over here, so if maybe you got that trade, maybe you failed to take this trade, my question is, Did it trade the low of this new week opening gap? Remember, my target is not that low, that sell side liquidity. My target is this low. So until this market is not coming here, I will keep waiting for a selling opportunity. Now I'd love to go for the 15-minute chart one more time to show you something over here. So this is that sell side liquidity. So far you have seen that market has cleared that sell side liquidity over here, and there is a 15-minute bearish gap. So I'm going to mark that 15-minute bearish gap over here. That is now important to me actually. So this is the 15-minute bearish gap. I will just mark it as a 15-minute bearish gap. Going to remove this last fair value gap from my chart and keep it over there. Okay. So over here, so far we have successfully break down this selling opportunity. I showed you the premium and discount. Everything has been shown. Now where the market came, deep discounted area. It's a very deep discounted area. Market actually fall a bit more, I guess. Yeah, it came to this area. There is no other low below that low. When it came to this deep discounted area, to that specific new leg, I would love to see it will go to this premium again. If it failed to go to the premium, there is nothing wrong. To be honest, absolutely everything is cool. But if it can go to the premium, that is the best case of scenario. Let's break down the new setup. I'm going to keep it over here. Just remember, this is the 15-minute bearish fair value gap. Okay, so over here, this is the 15-minute bearish fair value gap. Market came here. If it trade the low of this new week opening gap, that means I have no other opportunity to go for the sell. No sell is valid anymore. The lower quadrant of the new week opening gap is holding the market, sent the market actually a bit higher. Am I interested to take any kind of sell here? Of course not, because the liquidity has been taken. Then this market, you can see some kind of consolidation, then it started to go higher. Am I interested to take the sell? Of course not. What I need to see if this market can take some buy side liquidity and trade something that will help me to frame the sell setup. As well as you can see here, I have used this quadrant level to frame my sell setup. Here I have the opportunity to use this 15-minute bearish fair value gap to frame my sell setup. Then this market, it has already cleared the buy side liquidity. Look at this, how beautifully it has cleared that buy side liquidity. Any kind of sell is valid now, but it is better if it can come to this 15-minute gap. That would be the best case of scenario to take the sell, because I will have a higher time frame. But as it is inside this the new week opening gap, new week opening gap, I really don't need to see it will trade this opening gap. 15-minute bearish gap. It doesn't need to trade that. Instead of that, if it can even trade the 50% of this new week opening gap, that is also enough to think about a selling opportunity. And then you can see there is no selling opportunity, and I'm not interested to take any kind of buy over here. Finally, it came inside this 15-minute bearish fair value gap. Whatever I will get to take the sell, I will take the sell. Market should tap to the low of this new opening gap. Still some portion is open, so that is a real liquidity void. No buy is valid for me. Market is going higher, okay, and then it has fallen around this area. Do I have any market structure shift over here? Still now I don't have any market structure shift. No setup, nothing. Liquidity has been taken, but no market structure shift, nothing. So I'm not taking any trade over here. I'm going to let this market, if it fall from there, for example, it has fallen from there, took that low, means I missed the trade. I had the opportunity, I missed the trade. Okay, absolutely okay with that. If I miss the trade, I'm cool with that. But I can't take any kind of sell without any kind of setup. So I need the setup first. There is any market structure shift? No. There is any order block? No. However, there was an order block actually, but I don't want to use this order block because this is not going to change the state of delivery. That is why this 15-minute gap I'm not using for the order block. I have told you about the order block. It is not that type of scenario. So still now there is nothing. So let's see how it is going to work. A bit consolidation over here, right? This is a bit consolidation. Either it will give me the setup or it will fall. I will miss the trade. Worst case of scenario, it will go through everything and it will keep going higher. If it happens, then I have already missed all the opportunity. Then market started to go higher again one more time. Am I interested to take the buy? No buy is valid. And come to this area, around this area, it came over here. After coming over here, it has cleared again the buy side liquidity. Again the same case of scenario. Everything is still the same. There is no setup. Same kind of fair value gap has been created here as well. I don't have any setup yet. No market structure shift, nothing, no order block, nothing at all. So I can't go for this trade. And then it went higher and a bit consolidation, a big, very big consolidation, and then still nothing. Okay, finally here. When this market has cleared this buy side liquidity, look, first it has cleared this buy side liquidity, right? Can you see even a single market structure shift? Nothing, 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 nothing. No market structure shift. Cleared that buy side liquidity. Fall. Did it shift any market? No. Then retrace. Trade this fair value gap. I'm happy. Maybe I'm going to miss this trade. I'm also cool with that. Finally, it has provided me the market structure shift. So I'm going to mark that market structure shift over here to here. This is the market structure shift. Finally got the market structure shift after seeing this candle. Here I have entry fair value gap around this area. A beautiful entry fair value gap over here. I called it the entry fair value gap. And then I have the breakaway gap. Over here I have the breakaway gap. So what do I need from the beginning? Breakaway gap, okay? From the beginning. When it came here, it failed to trade the low of this new week opening gap. So it's still the sell side liquidity is over here or the low is over here. So I would love to think about the selling opportunity. So I'm going to miss all of this buying opportunity, even though I have the market structure shift here. See this market structure shift. After the market structure shift, that was the fair value gap. Trade that fair value gap. Market went higher. Come back again to this fair value gap over here. Came here and then went too far. It's a big run. Trust me. From here to here, it's kind of 100 handle. I don't care about that 100 handle. I'm not interested to take that 100 handle. I can't take that 100 handle. I'll miss this trade. Then finally, it has traded this 15-minute bearish fair value gap. More importantly, the consequent crossment of the new week opening gap. From 15-minute chart, it seems like, sorry, 1 minute chart, it seems like it has been broken, but 15-minute chart, it has perfectly respected the consequent crossment. Then fall, made this fair value gap, trade this fair value gap, trade this fair value gap. Maybe it will keep falling now. I got the market structure shift over here, fair value gap, entry gap, and the breakaway gap. This market doesn't need to give me the entry. It can keep falling. Without me, it can keep falling. And if it do that, I am going to respect the market. I'm not going to chase the market. I will not go for the trade. Now it's time to look for the premium and discount. First of all, it fall here to that specific leg. I would love to look for that leg, okay? Because this is the independent leg to this new price action. Because I am using this 15-minute gap to expect that market is going to respect this gap and then it will keep falling. So here to here, this is the equilibrium or the premium area. Market came to this premium because it was in the it was in the premium. Market fall came to this specific leg, very discounted area, no problem. Then came until the equilibrium 50%, not the premium. I'm so sorry for that. It came to the equilibrium, then fall again. Right now to this new leg I showed you here, remember, to that leg, it should work with the discounted area and then it should keep falling. Maximum it can go until the equilibrium. In that new leg, I'm going to mark the high and the low. This is the equilibrium. Body should not close above this equilibrium. It should work with the maximum the equilibrium. It should not go to this deep premiums. This line, deep premium line, it should not go over here. After getting the market structure shift, I would love to take the entry from this entry fair value gap over here. That should be the entry. I have to cover the breakaway gap, just the breakaway gap, okay? Because it's gonna be 40 handle. So either I can just, sorry, the entry should be here and stop loss has to just cover. The best is to put the stop loss over here. That is the best. 66 handle. I can't do that. Next logical level, above the candle which is build the breakaway gap, that is the next logical level. Still this is 56 handle. I can't go for that. Third logical level, above the breakaway gap. It is 37 handle. Now as it is highly volatile, I can maximum go for that, or I can just cover the consequent crossment of this breakaway gap. Below this area, I can't put my stop loss. In this area, I'll try to catch that run. Depending on that equilibrium, I'm going to believe that this equilibrium is going to hold the market, send it lower. How far? Until the low of this new week opening gap. If I get stopped out over here, the first time it will close below this entry gap, I'll try to take re-entry until this market is not going to take that high. Any single time it will fall, I'll try to take that sell. Premium and discount, it should work with this discounted fair value gap. Maximum it can go until the equilibrium. So this equilibrium, it should not go to this line, which is the deep premium. So if I could cover that premium line, that would be the better or the best. But as you can see, it's 41 handle. I'm not interested to take that much risk, so I'll keep it around 30 handle, just the consequent crossment of that breakaway gap. Will take my decision to take re-entry if I get stopped out over here, and if I see that market didn't clear that high, because this is the origin setup high. The first time it will close below this entry gap, I'll take re-entry after getting stopped out. The market should give me the entry within 3 candle or 5 candle. If it doesn't do that, I'll not go for this trade. Or if it tap to this low and then come back again here, I'm not going to take this trade. Okay, so let's see what happened. The next candle went higher bit, good. Then this come here, over here. Okay, where did it trade? The equilibrium. I'm very happy. I don't want to see it will come over here. So it came to this equilibrium, accepted. Should work with this discounted fair value gap. I'm happy to see that it came over here. Let's see what happened to the next candle. Next candle, still equilibrium is holding the market. Okay, then the next candle, weak did until here, accepted still, because breakaway gap, consequent crossment until here. I'm happy to see it will trade until here, the 50% of this breakaway gap. Just don't want to see it will come to this deep discounted area. Okay, and then the next candle, it is also a bigger wick, trade the consequent crossment. Wick didn't do the damage. Fortunately, I'm safe. If my stop loss was exactly to the breakaway gap, maybe I would get stopped out over here. So always I try to give some space, okay, above the consequent crossment, because sometimes wick did the damage. So some space above this consequent crossment, I would love to put the stop loss over here. Still, if I'm unlucky, maybe I'll get stopped out, just because I can't put my stop loss here or here because of the volatility. So I will try my luck. If it doesn't work, I'll try to take re-entry. Then the next candle, it started to fall. Happy to see that. Highest up close body close candle is going to be my order block. Where the market worked? Equilibrium. Is that random? Where the market worked with the discounted area, even rejected to go until the equilibrium. Worked with the discounted area. Here, perfectly equilibrium. Highest up close body close candle is going to be my order block. So if I would love to add more, I can add more with this order block over here. Going to remove this premium and discount leg so that there will be less line over here. The lower quadrant of this new opening gap, don't want to see this is gonna be broken one more time. It should react as a resistance now, and then market should keep falling. So if I would love to add more, I can add with this order block. Okay, the next candle, open, trade that order block, lower quadrant, discounted fair value gap one more time to the top of this area, and then boom, over here. Now it will keep falling, I don't care. My target is until the low of this gap. After clearing some partial, wherever you feel good, maybe 1:1, maybe wherever you feel good, just take the partial, hold the trade until the most logical level. So in this PM session, I would love to go for these two trade for 156 handle for this sell side liquidity over here, after clearing some partial successfully without getting stopped out by using the premium and discount with the best 22 YT model setup, and this 95 handle by taking 31 handle stop loss without getting stopped out successfully until here. At the same time, you can see here the stop loss is 25 handle. If I saw it's more than 25 handle, I could maybe risk until the consonant crossment over here, but you can see it's just 14 handle. I don't want to take that risk, so it's safe over here. Like 25 handle is enough. Okay, here it is bit volatility, that's why I just covered the consonant crossment, but again I should told you where should be the best area. But as I told, if I get stopped out here, I'll try to take re-entry. Fortunately market didn't stop me out. All this consolidation, I don't need to worry about that. All this fall, I don't need to worry about that. Only FOMO, fear of missing opportunity, will let the people trigger here, and then they will get stopped out over here. Trigger here, maybe if you trigger here, you are not going to get stopped out, but at least without the logic. So if you push the button here, why you should not push the button here? This is the same kind of scenario, right? Here and here, but here this is the logical area to go for the trade. So why you are not interested to push the button over here? However, this order block and here the up close body close candle, that order block are the same order block. I just forgot to mark this order block over here. So if you remember here, okay, that is also the order block. So if you want to add more over here, when this candle closed below this order block, you could add more over there. However, this was the order block, that was the order block. This was the PM session when I'm going to miss all of this fall from here to here. I'm going to miss all of this fall. I'm not going to cry because I know how to catch these falls. And you are also learning by using premium and discount the logics that's gonna repeat again, and again. I'm so sorry guys if this video is really so big. uh, but it is what it is. I tried to make sure that everything is clear to you. If you have done to watch until here, make sure that you have pushed the like button, you have write down boom on the chat box, on the comment box, and just subscribe to our channel if you are new. Every day I'm doing the live streaming around the morning session, and I'm breaking all of this price or the price action into pieces every day with so much precision. So try to join me to learn more and to get your freedom, financial freedom. So until the next video, cheers guys.